Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 24th of June. I'm Daniel Lam, your host for the podcast. The Magnificent Seven has entered correction territory, i.e., down more than 10%. Now, fundamentally, the net income growth between the Mag 7 and the rest of S&P 500 is narrowing. Now, this can lead to rotation out of the Mag 7 into the other stocks in the US. Now, of course, in the recent podcasts, we've been talking about the psychological signal from equity raising, from the Mag 7 and the IPOs of the related companies. It suggests that the AI CapEx cycle is entering an increasingly mature and capital-intensive phase, where even cash-rich hyperscalers are increasingly tapping external capital. And to put in perspective, the IPO size this year is estimated to be 3 times more than the IPOs for the last 4 years combined. This is a key reason why we're having the correction that we are seeing right now. Now, on the macro front, it is good news is bad news. US economic data is strong, but under an inflationary environment, this means rate cut is being pushed out further and further away. In fact, there was a hawkish tilt at the recent FOMC, with Walsh prioritizing the control of inflation over supporting the employment market. So this is a case of good news in economic data, but bad news for the markets. So, should investors be worried about the prospects for risky assets? I would say that we're likely to see more volatility ahead in the near term, but the fundamentals still stay strong. For example, US equities are still demonstrating robust earnings, with healthy beat and guidance in the recent earnings season. And the progress in the Middle East can alleviate pressure on inflation, and thus eventually lowering the likelihood of Fed rate hikes. All that would help support risky assets. Hence, further correction can represent good adding opportunities. For example, in the S&P 500, we see interesting levels at the 100-day moving average at around 7,050, followed by 6,750. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.